on. Someone had a question and I just didn't see it. Yes. Sorry. Bollinger Band settings are standard. I will show you guys how to apply these right now really quick while we're going through this. All right. And everybody, please take a screenshot of these rules right here. All right, let me move it so you can see everything. Okay, take a screenshot, please. Let me make these darker. Okay, do you guys see this? Does everyone have this? Drop a 777 once you have all of this info. And then I'll show you guys how to do the Bollinger Band settings. Hopefully that's not my son. He shouldn't be awake yet. Perfect, thank you.
Brenna, can I just ask a question?
Yeah, of course.
When you marked the upper band, and you said that was a perfect to your left, so you've got that one right there. And I was just wondering what's particular. I know it's got wicks, but what's particular about that structure? There's one wick on the outside of the upper band, and the other one is on the inside. But
yes, so that's price. That is price starting. So remember when we talked about when price broke out of the Bollinger Band and how that's a riskier trade?
Yes.
So once that trade becomes safe again, like a safe entry for the next trade, right? So once we start seeing these rejections, if we're in this buy, if we took a buy here and we stayed in it, or we got out here, re-entered down here on a riskier buy, knowing that this was a closed candle on the outside, we took it all the way up here. And when would we get out of it, right? When price starts rejecting, right? So we would get out of our buy. So what I'm saying is the perfect entry for our sell after our buy is over is once price rejects the Bollinger Band. Here, I'm going to zoom in. So,
right, okay, I get you.
So it's on the inside of the Bollinger Band, and it's a perfect rejection coming back inside of the Bollinger Band, right? It's nothing hanging out on the outside. These are still nice rejections. Like this would even still be this one right here. This, sorry, let me move this. Oh, whoa, I didn't mean to do that. This one would even be considered a wick rejection back inside the Bollinger Band. So this would even be a good entry. But it's this that I'm looking at and showing you guys as a perfect entry right here. That is a beautiful entry. Like it's just perfect. The way that it's not even hanging on the outside, not testing the area anymore. It's done testing that area, you know, it's kind of done hanging out on the outside of the Bollinger Band. It's back in the safe zone, you know. So
thank you.
This is back inside the safe zone. We're entering our sell here, taking it down to the next Bollinger Band. Does that make sense?
It makes sense. Sorry, I thought because both because the green and the red, I was thinking, okay, there's something else wonderful going on with this two of them together. But actually, I understand what you're saying. It's really the red wick that you are.
I mean, this is still a great entry. It's just since we're just coming out of this riskier territory, we kind of want to be more sure of ourselves, you know? We want to be like a little more careful, because when we're scalping, especially using this strategy, you want to have a sniper position. You know, you could get in and that just know that that's a little riskier if you're outside of the Bollinger Band entering. You want to wait until you have a full closed candle or you're fully back on the inner portion of the Bollinger Band, right?
Thank you. Thank you
So
very much.
same thing for right here. Same thing for right here, you guys. See this? Same thing for right there. This is a beautiful example as well. Like we're getting a nice rejection. We are thinking we're going to reject the Bollinger Band. This is for sure going to be a nice sell. We start rejecting it on this candle. We're thinking this is going to be a nice sell, right? And then we get a second rejection on the inside closed candle. We're like, this is going to be nice. I could enter here. This is an even further confirmation. Like we're really now on the inside of the Bollinger Band. You know, we're going down. So enter here and then take it all the way. And look how many pips we're going to collect. Even down to the first Bollinger Band, 173 pips. Down to the second Bollinger Band, once it crosses and rejects this area where we circled before, where was our perfect rejection area that it rejected over here, that's 337 pips. That's a lot of pips, you know? So anyways, yeah, does that make sense to everyone? I hope this is a good class. Is everyone learning stuff?
Could I ask a question?
Yeah, of course.
I noticed that firstly, the momentum dies a bit when it comes outside of the Bollinger Band. And you basically want to confirm when it's inside that it's lower than the previous close.
Wait, sorry, say that one more time, because
so if you look at the wicks on the outside, say the blue bullish candle of any candle there, the wicks are outside. Yeah, the wicks are outside. Yeah, the wick is outside the Bollinger Band, and when it wicks back in, it closes below it. That's what you want to see: momentum dying down from the buy towards the sell. Right?
Exactly. Yeah. So once you see, like, say you're in this buy right here, you took this buy right down here. Say you took this rejection off this Bollinger Band at the bottom, this buy, then yes, you collect here. If it crosses, you could stay in it or collect partials or put your stop loss in profit, right? And then protect your profit. That's the whole point of scalping. Protect your profit at each Bollinger Band and then take it all the way up here. Once you see the wick come down and hit this Bollinger Band and there's no closed candle on the outside, you know this is going to start selling. So get out of your buy, right? And look for a sell, because this is perfect. These three wicks, there's zero candles on the outside of the Bollinger Band like that are closed. These are wicks, but that's what we want. We want to see the wick.
Got you.
And we want the candle to be on the inside of the Bollinger Band. This is an example of the candles being on the outside of the Bollinger Band.
Yeah. Okay. Cool. Thank you for that. And one more thing before you go.
Yeah.
Do you time trade? Like trade with time? Because I noticed those wicks happen at a certain time, 6:30 here and 7:30 there. You know, those ones at the bottom.
Wait, which one? Sorry.
The wicks for buys. So
these?
Yeah. So yeah, I noticed that it's at certain times of the morning, or is that how you do it as well? Time.
This is all on the same day because we're on the 5-minute time frame.
Yeah.
So this says 6:30 it hit here, 7:15 it hit here. But if we go on a higher time frame, I mean, I don't really do that. I don't really trade with times, but I know some people do. And honestly, I want to start paying more attention to that. But no, I don't really do times.
Thank you.
But it looks like every 30 minutes or half an hour is when it's hitting down there. It's right exactly on the 30 or an hour.
I just really love NAS, to be honest. I just love the way it pays. I love the way it moves. It's just there's a love-hate relationship at times because it does wick a lot and you're in a buy and then it wicks back for a sell and then you're like, should I come out? Should I stay in? Can I manage this kind of drawdown? you know, so that's why I really wanted to. I saw how good you were at NAS, so I said, I'm gonna go and try and learn from the master, you know.
Thank you. And thank you for hopping on this session. I hope you learned something from today's session. And yeah, I really want to get anyone's questions out. If you guys have any more questions, like please ask. I know that Bollinger Bands can be intimidating at first, but it's really easy once you get a hang of it.
Can I ask a question, please?
Yeah.
How do you look at your time frames? So, because I joined you this morning and I know you were going between your 5 minute, your 3 minute,
Oh, yeah.
1 minute.
Yeah. Okay.
What are you doing with those? Yeah.
The reason why I was doing that this morning is because I want to show you guys the little area that we were working in was so tiny. The only way that we could get a trade was from using the low time frames, because this is such a tiny amount of pips. This was the area we were in. So it was really, really small, like a tiny area to work with. So that's the reason why I was going on the lower time frames, because it gave us a little bit of a bigger visual perspective of the Bollinger Bands. Does that make sense?
Yes.
Because it's such a small area. If the smaller the time frame on this tinier consolidation zone area that we're trading within with the Bollinger Bands, the bigger the area looks, obviously, because it's like you're zooming in really, really far. But really quick before we end this session, a great thing to go in and same like kind of correspondence with that is if you're on the 5 minute time frame, say you're on a pullback, like say you're in the middle, which normally pullbacks or indecision in the market happen on the middle Bollinger Bands. So that's why we take profit and reevaluate the trade, see what happens, see if it's going to continue or go back. So when price is hitting the middle Bollinger Band on like a 5 minute time frame, it normally means the 1 minute time frame is starting a trade. So if the 5 minute is in the middle, maybe the 1 minute is at the top of the Bollinger Band about to sell, right? So say price is right here on the 5 minute. On the 1 minute, we could be taking a 1 minute sell from the top of the Bollinger Band on the 1 minute to the bottom Bollinger Band on the 1 minute. Does that make sense to everyone? Drop a 777 if that makes sense, because that's kind of a weird concept, but it makes total sense when you get it. So look at the candles I'm showing you really quick. I want you guys to look at these candles. So, and I can't really show you from switching time frame to time frame because it's going to change my location and it's going to confuse everyone. So when price is hitting right here, see where price hit right here and we see a little bearish candle. You see this bearish candle right here in the middle? Drop a 777 if you guys see that little bearish candle in the middle of this 5 minute Bollinger Band. So on this 5 minute Bollinger Band, this was probably on the 1 minute time frame. If we were looking at this from the 1 minute time frame perspective, this little bearish candle was probably an entire sell from the top of the Bollinger Band to the bottom of the Bollinger Band, but on the 1 minute, like very zoomed in. Does that make sense? And then once it hits the bottom of the 1 minute Bollinger Band, it's going to buy again, right? Does that make sense to everyone? So imagine you're looking at this from the 1 minute perspective. And here, let me draw these like with my, do I have a pencil? I don't even know if I have a pencil. But here, let me do a curve. So say this was the top. Oh, it's curving the wrong way. This is the top of the 1 minute Bollinger Band, right? It rejected the top and then it came to the bottom, right? Do you guys understand? So this, imagine we're on the 1 minute time frame. This is the top. It would reject, come down to the bottom and then buy again. Or maybe it came down to this bottom. Maybe this was the bottom, right? And then it bought again at the bottom of the Bollinger Band, bought up, and then hit it again. And then it probably did it again, had another, like once it was at the top of the Bollinger Band on the 1 minute, again, it sold down to here. And then it hit the bottom of the Bollinger Band, the 1 minute, and then it went to the top. Does that make sense, you guys? So from the 5 minute perspective, it looks like how we're looking at it now. But from the 1 minute perspective, that's what's happening when price hits the middle Bollinger Band on the higher time frame. So if price is hitting the middle Bollinger Band on a higher time frame, the lower time frame is probably doing a full move from the top to the bottom of its Bollinger Band. Okay. So same concept applies to like the 15-minute time frame and the 5-minute time frame. When the 15-minute time frame is hitting the middle Bollinger Band, then maybe the 5-minute Bollinger Band is doing a full trade. Does that make sense? Drop a 777 if that makes sense. Okay. So now we're looking at the 15-minute time frame, or let's look at the 30 even. So the higher the time frame, the bigger the trade. Obviously, everybody knows that. So the higher the time frame, you could even use this concept for intraday trading, for swing trading. You really can use Bollinger Bands. It's just you're less sure, especially because when you're looking at Bollinger Bands from like a monthly or daily perspective, the end of the Bollinger Band is kind of infinite. You don't know if it's going to continue to the upside or if it's going to continue to the downside, because the trends stay along one side of the Bollinger Band longer on the higher time frames. On the lower time frames, they bounce between the Bollinger Bands more often. So that's why we use the lower time frames when we scalp. Okay. I mean, that's why we use the lower time frames when using Bollinger Bands and scalping. Okay. But you can always get an idea of where like a better perspective and an outside perspective by looking at the higher time frames and thinking, okay, potentially we could be selling soon because we're rejecting the top of this Bollinger Band, and we're on the 30-minute time frame. So looking at the smaller time frames, we could be selling soon because we're kind of starting to get a rejection off of the Bollinger Band, right? So we're not sure though, because this Bollinger Band is there's still room, and we do have a full candle closed on the outside of the Bollinger Band. So if this is the case, and do you guys see, I want everyone to tell me if you guys see this candle closed on the 30-minute time frame on the outside of the Bollinger Band. It's very slight, very, very slight, but do you guys see this? Okay.
Yes.
All right. So if you guys see this could be a riskier, like we're probably going to sell for now, like temporarily, but due to this happening on this time frame, on such a high time frame, 30-minute time frame, we could potentially still continue to the upside. There's totally potential for that. Okay. We want to see what's happening on the higher time frames. We want to see what's price doing on the higher time frames in regards to the Bollinger Band. On the 1 hour time frame, look at that. It's even more broken out of the Bollinger Band. So this is risky territory for a sell, because looking at the higher time frames, we're still hanging out on the outside of the Bollinger Bands, right? So if anyone's waiting for a market correction, we could get some small sells in the meantime, but price could maybe continue to go up until we see that price is coming back down on the inside of the Bollinger Bands on the higher time frames. Drop a 777 if that makes sense to everyone. So the higher the time frame that price is broken out of the Bollinger Band, the stronger the move. Like the stronger the probability is that. So here, let me type this out. So we have this because I'm confusing myself. So higher the time frame probability is the higher the time frame price is being broken out of means the higher the probability is for price continue that direction. So until we start seeing price go inside of the Bollinger Bands on the higher time frames, we shouldn't expect for price to go down that far. It may go down like on a smaller time frame, like to fill these small Bollinger Bands on these lower time frames, but it's not, until we see price continue to come back inside of the Bollinger Bands on the higher time frames, we are still moving in a momentum towards the upside. Does that make sense to everyone? Drop a 777 if this makes sense about the higher time frames.
Can I just ask that? Do you have to check all? So I get that.
Yes.
So you would check all. You would check the
not, I mean, when scalping, you don't need to, but I always recommend that you should be aware of where price is on all time frames, like at all times in trading in general, because yes, it may not be relevant for like this tiny little scalp, but dude, this is not even a big move. Like, okay, this is a big move. This is a big move, but basically what my whole point of that is saying that like, you want to be aware. You just, even if you're taking a smaller time frame move, like from this here to here, you want to be aware that after price rejects the bottom of this Bollinger Band, we're probably going to continue to the upside, like on the bigger perspective, right? Like, just, you want to be aware of where price is at all times when trading. You just want to be, the more aware you are of the higher timeframes and all the timeframes, where price is sitting on each time frame, the better idea you have and the more accurate and precise idea you have about where the market will be going next, right? That's the whole point of trading, is getting the highest possible prediction of the market that you can get, right? Getting the most accurate as you can get as far as your predictions go. So if you have a better understanding about where price is on every time frame, and you can see it better as you learn. So like, study each time frame and understand that we're hanging out on the outside of this Bollinger Band. We could probably continue to the upside for a while until price comes back safely inside, how we showed you before, safely inside with those wicks, right? Safely back on the inside of the Bollinger Band. That's when we're finally not going to be going in this huge upward movement, right? Which we really need to get a correction on NAS pretty soon. But until we safely enter back inside the Bollinger Band on the higher time frames, we're probably going to continue until we get any clues letting us know we're going back down on a higher time frame. We're going to know that price is probably continuing in the in an uptrend, right? Does anyone have any questions? Yes, let me show you guys. I don't even know where I wrote it. Okay, screenshot this, you guys. I can also drop this in the chat so you guys have a copy of it. Oops.
I'm sorry, can I ask one more question? I'm so sorry.
Of course, please.
So when you are with the time frames, how far do you go? So is it like, I mean, I'm just learning to mark up and stuff like that, but would you still look at when you're looking for the candle or the wick to be inside of the upper band, are you looking at the 4 hour one day? Do you have to go through the whole lot? Or do you say, right, I'm checking out the 4 hours, the 1 hour, the 30 minutes, you check all, or do you go all the way?
I look at all of them. I see where's the next time frame. So like if I'm hanging out, I'm on the 1 hour time frame. That's already so high. So if I'm on the 1 hour and I'm still hanging out on the outside, price is still on the outside of the Bollinger Band with the closed candles, then I want to look, where's the next time frame that has the Bollinger Band on the outside of the candle? You know, I want to see what's the next time frame I can find that shows me the Bollinger Band starting to collect the candle underneath it, right? So that's what I want to do. I want to look, okay, outside of the Bollinger Band, we're on the next time frame, 4 hour, check, it's still on the outside. Daily, we're really on the edge. It's starting to go back on the inside on the daily, but we're still closed on the outside. If you see it, if you look closely, can you see that? See how the corner is sticking out? So we're still on the outside. We're on the daily time frame. That's a big time frame. And the Bollinger Band isn't curving over on top like creating a resistance. It's pointing upwards. It's pointing straight up. So we still are in like upward momentum on the higher time frames, right? I'm on the weekly next. Now let's see what's happening on the weekly. Still, the corner is super, look at this candle on the weekly. Oh my gosh, it's nuts. So we're still hanging out on the outside. If you look previously, this is when we'll know. This type of situation is when we'll know when we're coming back down, right? When we see price on the inside of the Bollinger Band. So on the weekly time frame, we're still on the outside. The monthly time frame looks like we're still going up to this next fib level, which is an old fib level from a huge trend from before. That was like a future, once we broke the all-time high, then we'll go to these next fib levels. So probably until we hit this 14,845 area, which, you know, I'm putting this on the record, we're recording this, so in case that happens, I know that my prediction was correct or wrong or whatever. I can evaluate then when price reaches there. I predict that price could continue up into this level and then have some type of reaction off of 14,843. But, and to answer Mario's question from before, you said basically don't counter trend. That's not what I'm saying. We're on the monthly time frame. This is a really high time frame. We can still catch little sells on the lower time frames that are worth the money. So if we see a nice entry and exit on the 3 minute or the 5 minute, we can still take it. So like you could have still taken this entry on this sell down to this level right here. And that would have been, let's count the pips. So even like if you could have taken this sell right here, that would have been 231 pips. That's a lot of pips. You can still take sells here. Like we could have taken a sell right now. But anyways, yeah, you guys, the market just opened 1 minute ago. So you can use this concept, you guys. But just know that you want to be in and out of the market, protect your profit at each Bollinger Band. If you took it, your trade right here, you would collect your first bag right here. That's 100 pips in the bag, right? And then you can collect again down to here. 224 pips on the second one from the middle Bollinger Band to the second. If you did the entire trade from this rejection to the bottom, it would be 340 pips. So to answer Mario's question and respond to that, you can still counter trend with scalping on the smaller time frames. Just make sure you're collecting your profits, protecting your profits at each Bollinger Band, okay? So before we sign off, you guys, I want to show you guys, oops. My let's see, where is it? This my downloads. Here we go. Talouche. Just the new one. Okay. Copy. I'm gonna send you guys something right now. This is also in Discord, but just so you guys have it, I just sent it to you guys. Please, please, please save what I just sent you. Save what I just sent you. I sent it in the chat. It's the rules So you guys have them, and you can save them on your computer. The Bollinger Band rules and the stochastic rules are also on there, and we'll talk about those on next session. But we're also next session going to do Fibonacci levels. So we can go over like when price breaks all-time highs, where to look for the next levels. And we can evaluate and remember my prediction for the potential next level. If we get a retracement before then we know, then my prediction was wrong. But this is the next level I see price continuing to on a higher term perspective. So like for a swing trader or intraday trading, not for scalping. Okay, you guys. All right. If anyone doesn't have any more questions, we will end the session for today. And I hope you guys learned something. I hope this session was helpful today. Drop a bumblebee if you guys learned something today. Awesome.
Thank you.
Of course, no problem. All right, you guys, I'll talk to you soon.
Thank you.
Have a great one.
Thank you. Bye-bye.
Take care. Bye.